Okay, Dan Fitzpatrick here, stockmarketmentor.com. And I want to look at Oklo here. Now, this is a stock, if you're not a member, then you wouldn't know this, but I put this stock on just not too very long ago on the 14th of July, which is this day right here. Will mark the spot. Sorry. Okay. On this day, on the 14th, put this on the list. Now, let's look at this and see exactly why. Like, what was the rationale there? You could buy it at any time. But this is a stock that I'd been looking at. You could see the nice pattern here. It's a nice cup. Looks like we're starting to form a little bit of a handle. And so the idea would be, okay, typical cup and handle trade. You see the cup, you see the handle. This is $70. This is the high part of the handle. So we wait until the stock breaks out to a new high, and then that's when we buy. Well, the alternative, or I should say the trade before the real trade, is to take an anticipatory buy. In other words, you're just kind of getting in at a lower price with the assumption that the stock's ultimately going to come and break out. You don't know that for sure, but it might be. So you're looking for an entry somewhere around here. I didn't really see it back here, but you're looking for an entry somewhere around here. And then, like, if you're buying, you have to manage your risk, and you say, okay, well, I'm buying, let's say, here, and so I'm going to manage my risk at 8% or a little more than 8%. This is actually a pretty volatile stock. So I didn't do that. I saw it the following day here, and that's when the decision was to buy the stock. It was actually a pretty good entry right here, and the reason that is I had set an alert. I'd set an alert. It's my trading assistant. Just above this level, 57.65. And so, bam, it fires off the next day, pulls back a little bit, and then I was actually able to get in a little bit lower than where the alert fired. And so now we're off to the races. So sit here, sit tight, wait for the stock. It's performing really well, almost there. Oh crap, it's pulled back, still well above our entry, so we'll sit tight. Now it's the 21st. Bam, and finally we get this breakout, and here we are. By the way, this is something that will often happen, where you'll see a stock, it'll come up and test. If it's kind of a flattish pattern that's running up a right side, it'll come up and test a prior high and then pull back. And you may look at that and say, okay, well, that's it. That's breakout's not going to happen. That's the end of that. But if you just wait, watch it for a day or two, a lot of times you'll see this kind of action. And I'm not talking about like, so this is where you buy it or whatever. We're not going to go back in time and say exactly what to do. Next time you see this, whatever. All I'm saying is that you see a stock and it tests and then it fails to push through this resistance, and that's a pretty significant sell-off there. If you look at it from 70, comes all the way down and closes down just about 10% in one day. And so this is a pretty big pullback, but excuse me, you don't want to just now throw the stock away and ignore it. Instead, say, okay, well, we got a nice thrust to the upside. Volume, I'm not going to say, oh, it was lower than average. This is a pretty high volume day. And so then you look, okay, the following day, another sell-off, but not so much. So you can see that the downside momentum has kind of waned here. Stock still above the 20-day moving average. I'm still not going to buy it here. I'm happy that I bought it down here, but I'm not going to look at this and say, oh, I'm going to take more stock. You might, somebody would, but bam, now this gets your attention, and now you'll say, all right, well, I got some down here. I'm looking to get some up here. Maybe I'll buy right here. I'm getting actually a pretty good advantage because it can run up another 3-4% before it actually breaks out. So I'll buy the stock here, treat it as a separate trade, put my stop just below this intraday low. So I'm really buying this candle right here, put my stop here, and then hope that the stock continues higher. And then it does. So that's your trade on Oklo or Oklo, however you want to say it, OKLO. And I'm looking at this as like probably a $90 stock or so. That's my conservative target. My bet is it'll probably go to $100. So anyway, that's all I got for you. And if you are not a member of Stock Market Mentor, look, we're crushing it. You need to be a part of that. I think it's 7 days for a 14-day trial. If you don't have $7, you really need to stop spending so much money. You can put in $7 for a 14-day trial. By the end of that time, you're either going to dig it or you're not. Okay, but you don't know if you don't show. All right, see you guys next time.